Good morning, everybody. Today is 31st day in the month of March 2022. My name is Heritage Adisa, market analyst at HotForex, and quickly as usual, check the markets, find out what the dominant sentiment is, the big stories, the big drivers, if they provide opportunities, and then how we can take advantage of it. But please remember that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. Another day this week, another mixed environment. Generally, we've not really had a clear drive this week. And from the start of the week, we've always said that this is a very high probability because we have month end, we have quarter end, and even Japanese fiscal year end, and all of those factors, had just kept things really all over the place. But from that, even the talks on the ceasefire talks in Russia and Ukraine have not still been able to give us something clear. Yes, there's been positives, there's been negatives as well. So there's just been back and forth, positives and yet still doubt over the positives. It's just kept everything all over the place. And starting this session is not different. We're starting with another mixed environment, right? Starting with another mixed environment, right? I had this written earlier. I said the equity space reflects the overall mixed environment as it trade mostly all over the place, right? Look at US futures, for example, mostly flat. Look at the European bourses there, the European equities there. Yes, it started higher. Most of them have pulled back now. You look at the Asian equities as well, pushed higher, and now they're back lower. That's a clear, mixed environment. On the other hand, you have the commodity space. Commodity space, yes, mostly pressured. Oil prices are down. In general, commodities are down really, and what that could be number one on the back of back and forth in terms of the ceasefire talks. There's that. Apart from that, you also have oil prices coming down on the back of President Biden considering massive release of oil from the reserve, the strategic petroleum reserve, right? Up to the tune of 180 million barrels of oil, about 1 million a day over the next couple of months. Now, clearly that increases supply in the market, and that's where you're seeing oil prices come lower. But in putting this in context, you look at that, yeah, it would help. It will help push prices down a bit. But generally, how sustainable is that? Because you look at the overall consumption of oil is still massive. You look at Russian supply is still not there, right? All of those things. Yes, in the meantime, you're seeing oil prices come lower. But if you look at it on the balance, I don't expect that downside to really, continue for so long heading into a couple of days and weeks, right? But clearly is what we have right now, and we still have to play with it. Except maybe there's further developments, maybe further, ease, further, better developments from the Russia-Ukraine side. Maybe that would help better. But if that's not the case, this downside, yes, is there. But in terms of trying to chase it lower, I'm being a little bit more skeptical on that particular side, right? JPY continues to lead the majors, still strongest for the week, leading the majors as inflow back into the country ahead of its fiscal year end is still helping, the currency to the upside. Even profits can also helping the currency to the upside as well. Generally, having to trade into months and quarter end, it could make the flows in today's session really all over the place. So that means that as traders, you also have to be more careful, cautious, in terms of what we're doing in today's session. Equities trade mostly choppy for the day without clear direction for now. Oil prices are mostly down following the strategic or potential release from the SPR as well. Later today, we'll have the announcement or whatever Biden wants to do with, his own end to try and help or support energy, the energy markets. I guess that the VIX trade mostly flat intraday within yesterday's ranges, nothing much there. Bond market starts to pick up again in today's session. Clearly, that doesn't even bode well for risk assets generally, right? Look at the dollar index, has been pressured for most of the week, right? And that has been on the back of, first of all, we had strength in the euro when we first had more positive talks from the Russia-Ukraine side. We've had strength in JPY. Clearly, all of those components even are part of the dollar index, and clearly that has also seen the dollar index push lower for the day. I said this earlier. I said the mixed environment heading into month and makes the tricky one today. But and as such, patience will be very helpful. But you look at the weakness in oil prices. That's what we have currently. Look at the strength in Japanese yen, for example. You look at the weakness in commodity markets generally. One would say that looking at downside for the commodity currency against Japanese yen could be a way to go into this session. Two interesting ones for me: CAD JPY around 97.00. If we clear it out, we'll look at it again in a bit, and then NZD JPY if we clear out 84.5. In the day ahead, not much going on. Canadian monthly GDP out, yes, expansion expected, but not so much there. And then core PCE, this will be interesting as well, but this is the major tool or major measure of inflation that the Federal Reserve really likes and likes to pay attention to. So also one interesting one to look out for. Like I was saying, you look at the equities, for example, really all over the place from the Asian side down, up, right? You look at Japanese index as well, up, down. You look at the European side, up, down. You look at the likes of the UK FTSE. I mean, this clearly just tells you the kind of environment that we have, in today's session. And even the US bourses are not doing so much, really not going anywhere in today's session, 31st of March, and still within yesterday's ranges. That clearly points to the kind of mixed environment that we have currently. You look at the VIX as well, not doing much, although bond markets and bond prices have been pushing higher after finding, that low that we talked about a couple of sessions back around 121 there. We've really seen further pushes to the upside. Yields have eased. That clearly is not good for the dollar, which is one of the reasons why the dollar index has been down as well. Apart from that, you've also seen, it pushing high. Now, will it continue? Will it stop? Right now, there's still not so much to pay attention to. The Federal Reserve trying to tighten, yes, obviously is, a good one for yields as well. But generally, I mean, things are not really looking so soon because tightening into a slowdown also doesn't bode well for the economy generally. So all of those things are, factors to pay attention to in the day ahead. For the oil market, we talked about this earlier, right? Where we said we had that dip to the downside into the session, down almost 5% or even more. Now we're down just about 4.something% in today's session on the US oil side. Now, yes, down, below the hourly moving average is 1500 and 200. Clearly, that obviously doesn't bode well for price in terms of the technical side. But we've also found support very close to the $100 per barrel level, which has been a key level going back to 29th of March. And if you look back a bit, right, we also had it very interesting around. This was also around early March, around the 9th as well, as support level as well. So having to see some form of pullback from this level is not really a surprise. So that means that despite what we have right now, things are just a little bit all over the place, and it's being patient, not looking to jump into anything low quality would be a very good way to go. But on the Japanese yen side, you look at the likes of Japanese yen against the likes of the high basic currencies like NZD, for example. Commodity assets down, commodities down rather. Clearly, you want to see it should weigh on the likes of NZD, likes of AUD, likes of CAD. Now with JPY's trend, I like it as well, but conviction wise, not really much there. But you look at where we are trading right now. Right now, we're bouncing off. You're struggling with this key 84.5 level. You can see previous resistance, done support a couple of times. Yes, below the 1500 hourly moving averages, but we've not been able to break below this 200, hourly moving average as well. So what I'd like to see, if I was going to take this at all, would be a clear out of this level. Any clear out of this level retest, then I would be interested in maybe looking to chase this lower. Although, with the whole month and quarter end, all of those messy potential price action, I'm not really in a hurry to look to jump into trades like this. But it's one of the options into the session we can look at that. You look at AUD NZD as well. Another similar story there. Where we are currently trading at is also a key level resistance support around this level as well, and still just on the 200 hourly moving average as well. So if I was going to look at this as well, if I would like to see anything here at all, it would be a clearing out of this, a retest. Then I would like to look at it, looking for further downside on this particular one. JPY, similar story there as well, same way, same play out. But like I said, convictions are not really so strong there. We could look at this and say, yes, we broke below this key round number around 97.5. If we tested it, we could look for the downside. But heading into, support levels like this, it makes it just a tad more uneasy for me, especially that we are even at oversold regions right now on the stochastics here. It makes it a little bit just tricky for me. So I'll be more patient and looking to chase some of these moves to the downside. Another currency I still have in my mind that I still like is the British pound. I like downside in the pound. I've said this from Monday. We like euro pounds in terms of upside. We talked about that from Monday on the Monday show. We've pushed higher. Yesterday's session, we talked about it again as well after heading towards this previous high. Yesterday's session, we were above it. We tested it again. We pushed higher again. Now, this hasn't still changed, although heading into, month end, weekend, I mean, it's still, now late, but I mean, this played out for most of the week. Heading into, going forward, I still like further weakness in the British pound. I like it against AUD, for example. Although this will clearly be on the back of commodity prices recovering, not in today's session particularly, but clearly if commodity prices are to pick up back again, if we have, further tensions or the escalations, because there's been more and more talks that Russia are not really looking to do anything tangible with their pullbacks. They're talking about with the withdrawal. We're talking about more like a regroup. So there's been that general talk that's not really been as favor as positive generally. Yes, overall talks are still continuing. Yes, there's been, ceasefire talks about Zelensky and Putin having to sit down to talk. But in terms of undertones, there's not really been so overwhelmingly positive. So if the tensions really, really get worse, clearly you want to expect the likes of pounds also be weakened. The likes of commodities also pick up, so that supports the AUD. So I like to see further downside on this. Maybe from here, although in today's session, it's not really one I want to look out for because of the weakness in Australian dollar. But clearly, I'm paying attention to this level, this one, and even further to this one as well. In just over the next 2 days, over the next 3-4 trading days as well. I want to see how that plays out going forward. On the calendar, it's really, really a light one. We don't really have so much going on. Yes, later today we expect unemployment rate for Europe, but nothing really major there. I think PCE is going to be an interesting one to look out for, right? Even though right now market, I don't think this will change the stance of the Federal Reserve. But inflation is really, really high, and they've seen what they need to see. But we'll have to pay attention to this and see what comes out of this as well. And then Canadian GDP as well, although on the monthly side, also interesting want to play around with a couple of central bank speaks from Fed Williams as well, and then even SMB Michela as well. But apart from this, we don't expect so much in today's session. It's month end, it's quarter end. We could get choppy, messy price action, especially heading into the London fix as well. So all of those things make it a little bit tricky. But if you want to still look out for something, I like to see further strengthening JPY against the likes of NZD, AUD, NCAD. If this continues, maybe if this continues to escalate in terms of the weakness in commodity prices, that would be interesting. But clearly, I want to see a technical clear of those levels that we mentioned earlier before looking to jump into anything like that. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and would always do our best to help. Thank you. Do enjoy the rest of the training session. Bye for now.